Hey guys, welcome back to yet another episode. This is the Silly Balls. If you are new to this whole thingy, to these conversations between Vlad and I, we are two eToro popular investors. Vlad is going by Vlad D35 on eToro. Check him out. He's doing super well. And my humble self is Levi. I'm trading as Lizia Pukaya on eToro. And again, we're just having these bi-weekly conversations about all the shenanigans around the stock market. And today, a very interesting topic that I think we're gonna focus on, being a contrarian. What does it mean? Who is a contrarian? Why is it useful? Is it useful? So the reason why we decided to go with this topic was a post of mine that I've written a couple of days ago and posted it on eToro. The topic of the post was to how much should we listen to the mainstream media and the mainstream opinions of policymakers, decision makers, politicians, whoever, because what's fairly clear is that if you look back in the last 2-3 years, most of these mainstream narratives about the stock market, about the global economy, about the geopolitical tensions turned out to be awfully wrong. So the million-dollar question here, if these people or these narratives or these mediums are being repeatedly proven wrong, why should anyone go back to the news and read them again and listen to those and make their investment decisions based on that? I have finished that post with saying that what are the mainstream narratives right now out there, what moves the markets this way. And we could identify 3 of these. One was that the inflation will cool off as soon as the Federal Reserve takes actual action. The second one is that supply chain issues will ease by approximately by this summer. And the last one is that the broken record that everyone can see in the news week in, week out is that Russia eventually will attack Ukraine. So these are the narratives out there right now. So first things first, before we get to this whole contrarian thing, I just throw the curveball at Vlad and ask you, buddy, what is your take on these 3 narratives? Do you agree with them, disagree with them, agree with some of them? So give us a rundown.
Yeah, so before we actually go into these topics, I want to clear the air on something. Contrarian investing, at least in my opinion, is not being against the wind always. It's not always hoping for a crash. It's not not believing in anything the media says. I think that contrarian investment is not buying everything that the media and the top dogs are saying. I think that being a contrarian, if I were to summarize it, would be to take everything with a pinch of salt.
Absolutely.
Coming back to your question about the 3 main narratives, I think, of course, there is some truth to it, but I also think that is just what the markets want to hear. Yeah, so if you were to take the topics one by one, I would start with inflation, actually, because that has been a narrative that drove the markets for the past year and a half, maybe 2 years. As your post said, March 2020. Inflation is transitory. July 2020. I think I messed up the...
Yeah, 2021.
2021, yeah. Inflation is still transitory. Fast forward to November, inflation is no longer transitory. And as you also pointed out in that post, just imagine the reaction of the markets if the Fed chairman, Jerome Powell, would have come out in the midst of the pandemic and say, hey, guys, you know what? Inflation is pretty bad. The fact that we are buying assets at this accelerated pace is definitely not helping us. And yeah, expect that in 1 year from now, the price of used cars, for example, would go through the roof, 40% up. Yeah. Just imagine how the market would have reacted.
Exactly.
Yeah. So I think, that the Fed and, the top dogs in general, they took this approach, this accommodative approach, in order to, don't scare off the markets. But I also think that they were a bit too latent to admit that they were wrong.
Yeah, so what you said in the very beginning, what truly means to be a contrarian and taking things with a pinch of salt. We're going to come back to that in a couple of minutes, because I think that's the real beef here. But on that Fed inflation narrative, yes, the point is that, imagine, guys, if that happened. Just stop for a second, put whatever you are drinking, sipping, doing right now, and imagine it for a second, that in the next Fed minutes, in the next Fed meeting, J. Powell just comes out and says, well, we f***ed it up. We were wrong. We're awfully wrong. And imagine that he's standing in his podium and doing this speech. Imagine what, at this very same minute, how these indices would react, how many circuit breakers would be triggered if actually the Fed did that. But again, without going into too much detail, I'm pretty sure you guys all got the point. I think it all boils down to the fact that these policymakers and these decision makers doesn't really have the option to say otherwise, right? So what we just said right now is that they have to say, or they want to say, what the market wants to hear. So people wants to hear these kind of things that keeps them, relaxed and on track. Otherwise, we would live in a very much more eventful world. Let's put it this way. So okay, that's on the Fed. I think we're going to come back in a second on what if that narrative is wrong. What's your take? What's your take on the other two, the supply chain easing? So is it realistic that the supply chains will ease by this summer? Obviously, I have my own takes on this, but I want to know how you see this, and also the Russian-Ukrainian thing, because obviously this week it was all around the place. It was everywhere, and everybody is saying tomorrow Russia will attack. No, tomorrow Russia will attack. No, the day after tomorrow Russia will attack. So
yeah, no, I mean it got so crazy on this topic that even the Ukrainian president was actually joking in a conference. Oh, don't worry, the Russia will attack us on Wednesday. Yeah, he was just referencing to Biden creating this hysteria and this yeah.
Speaking of joking, after all, he's an ex-comedian, so jokes are kind of in his trade. But anyway, yeah, carry on.
No, so around the second question that you mentioned, the supply chain is actually very much intertwined with the topic of inflation, because I personally don't think that the Fed can do pretty much anything right now about inflation. And of course, a few rate hikes here and there to try to keep inflation in check. But the main driver here is the supply chain. And that has been, I mean, in the beginning, they used reasons, it's transitory because of stimulus checks. It's transitory because of infrastructure bills. It's transitory because it has been proven,
because of that, yeah.
Exactly. It has been proven that the main driver behind these whole inflation running as hot as you can, I wouldn't say as hot as you can get, but is the hottest in 40 years in the US. So it's clearly become an issue.
If supply chain issues don't solve, that maintains the pressure, the high pressure on inflation. So that's basically the beef. Do you see supply chains easing? Is that narrative? So there's another narrative out there that says there are less ships at anchor at the front of ports. The other thing, one of the previous episodes, we mentioned that, yes, because they are now stationary further out offshore. So that's just a half solution, really. But obviously that was a couple of weeks ago. Now we are in the end of February. Do you think it's realistic that in 3-4 months the supply chain bottlenecks and port congestions will be pretty much behind us?
No, I doubt it. So the supply chain issue is driven by two parts. First of all, transporting everything, getting everything from A to B, and then we know, I mean, by now it's pretty clear that this is a problem. I mean, as you mentioned before, ports are being congested. There is a very big shortage of shipping containers.
Yeah.
And then in the most recent development at the Canadian and US border.
Oh yes, 3 weeks they're having a party.
Exactly 3 weeks of almost no trucks passing by because of protests, which of course have had ripple effects and then have had copycat protests in France, in Australia, all around the world.
Yeah.
So that's one. I mean, transporting everything, which is bad. This kind of stuff. I mean, building new ships, getting new containers. It's not something that you can solve in a few months.
Exactly. And let me just quickly jump in and say two things, because I think that's highly relevant. I know, guys, we said we're going to talk about being a contrarian, but this is exactly it. So now we are discussing the contrarian approach of the mainstream narratives. So this is important to keep ourselves on track, that, you know, this is basically, let me say, what does it mean to be a contrarian is this: when you see something in the news, hear something in the mainstream, and you start to think about, is it realistic? Is it really, you know, take it, what Vlad said in the beginning, just take it with a pinch of, a huge scoop of salt, basically. But and the other thing is closely tied to what you just said about, you know, building ships and building containers isn't something that can be done in a couple of months. And that's interesting. I'm elbows deep. Those who follow me and copy me on eToro know that I'm elbows deep into shipping stocks and Zim, Danaos, Golar. Okay, it's an LNG shipper, but it's still, you know, it's a ship. Ultimately, it floats on the water. So again, I'm elbows deep into researching these stocks. And what is interesting about them is that people say these are still fairly undervalued, because people say that, oh yeah, new ship is going to hit the waters in like 2 years, and that's going to be it. The bottleneck is going to be, you know, behind us and cleared. But here comes the thing: if there's a short supply of components, whether it's a semiconductor that goes into the ship's radar system, or it's iron ore, or it's aluminium, or it's copper, then there is a fair chance that these newly built ships are being delayed, because all of the ingredients and the parts that go into building those ships are also currently got stuck somewhere. So because of that, it could be seen as a fairly valid contrarian approach to the thesis that new built ships will hit the waters in 2 years. Because what if? That's the most important question if a contrarian can ask. What if this narrative is wrong, because the parts and the materials and the commodities that needed for those ships won't be there in 2 years from now?
Exactly. And
yes.
You know, it's an ongoing cycle, because, you know, of the second part that's driving the supply chain issues, which are, you know, the supply of the components. So if everything, prices of everything went through the roof, as you mentioned before, commodities such as iron ore, aluminum, and so on, these have already surged in the past year, almost doubled in price for some of them.
Exactly.
And then factories are being overwhelmed. So you hear the CEOs. I mean, to be honest, I think the chip makers, CEOs, those are the most realistic. Also because the shortage in chips is one of the most acute ones. So yeah, most of them said that they don't expect the bottlenecks to go out until 2023, maybe even 2024. So it's bad.
I think at this point we can kind of wrap this part up and say that these two main narratives that are currently out there, so one is that says the Fed going to take action and that will eventually cool the inflation, and the other one that is, as you just said, closely intertwined with the supply chain thingy, is that, yeah, what we just explained now in the last, 8-10 minutes, there are very logical reasons to think and to back up the thesis, that the contrarian thesis that says, no, there is a chance that these narratives will be, again, just like the previous ones, proven to be wrong. So let's move on. Russia and Ukraine. We both have our own opinions. We discussed that both, you know, live and online, offline. What do you think? Because at the moment, the mainstream narrative out there says, you know, Russia gonna attack yesterday. They already attacked you. So we can see that in the mainstream media that a Russian attack is definite and it's imminent, and it's, yeah. What if it isn't? So, how would the market react if it turns out that it was like, you know, crying wolf, but it never came?
Well, to be honest, I think either way we would put it, even if Russia invaded and then boom, headline says war, And even if Russia backs off and the headline says, whoop, no more war, then I think in the mid term, the scenario will play out the same. Because if it says war, then whoop, the oil prices, net gas prices will go through the roof. But then a few days, maybe weeks in, the markets will realize, and then the policymakers will realize, wait, we're gonna impose certain economic restrictions on Russia. We're gonna try to play like the good guys, but still Europe relies way too much on the fossil fuels coming from Russia. So I kind of think that, that so negotiating around these commodities will play out nicely regardless. And
Okay.
then oil and nat gas, I mean, nat gas has been a bit more volatile, but oil has only been on an ascending path for a month now, maybe even two. So it's only going up, 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 up. So what goes up must also come down. So I think the prices for oil will eventually cool off a bit in the midterm, regardless of the outcome in this military conflict. But I mean, of course, there's a but. If you were to play this long term, I think the supply of oil is down so much, and yeah, it's gonna become this scarce resource, and then whatever resource is scarce is gonna be expensive.
Yeah,
and oil, I think, is not gonna be an exception.
Yeah. At this point, again, I just jump in because I think that's a completely different topic. And you know that I'm an oil guy, so I'm heavily invested in these evil commodities because I'm an investor after all. So I'm looking for opportunities and looking for value. And again, I stop here. We're going to talk about that in a separate episode. To wrap things up from a contrarian standpoint, there are three key narratives out there. One about inflation, one about the supply chain, and I'm speaking so slow because I tried to bend these fingers so I can. And the last one is, again, the Russia-Ukraine conflict, that we can say that whichever way it plays out, the markets will definitely see some volatility in all those asset classes and commodities and oil and gas that are affected. What else would you like to add, buddy, before we bugger off?
One of the what was the name? Like one of the contrarian approaches is usually no shorting, and just trying to make a preview for the next episode.
Mm-hmm.
Yeah. So
don't do it because it might turn out that it's not our next episode.
Why?
Because if anything happens, if Russia actually invades Ukraine,
it's gonna be the next episode regardless, because next week you're off.
Okay, yeah, that's true. Okay, I'm gonna chop it here. So yeah, lead it towards into the shorting.
Yeah. So if you're a contrarian and you're trying to take this kind of approaches, there's basically two ways of investing. You're either gonna go long on what you think is undervalued because of current settings, or you might go shorting because of what's overvalued because of this current setting. And I'm going to stop right here because shorting it's a very interesting topic, and that's something that we're going to discuss in the next episode.
We cut it here. It was long enough. See you next time.